Welcome, everyone, to our third session of our Ag Leasing Seminar here at the University of Missouri Extension. I'm Julie Harker. I am the Kaffner Extension News Strategist. And with me this evening for our third program is Ag Business Specialist Jason Morris. He's going to talk about items in a lease and cash leases. Our series, as you know, is designed to help farmers and landowners with their leasing arrangements. Also want to remind you that we have the opportunity for you to ask questions by typing them into the chat box, and we'll get to those at the end. Also, make sure that you are muted. That helps with the audio overall. So welcome, Jason. Tell us a little bit about your role.
Thank you for allowing me to join this discussion this evening. I have been with the University of Missouri for about 4 years now, and I am based out of the Southeast region. I have very much enjoyed being in the agriculture and business policy program. We have done many great things and have impacted a large population of Missourians. One of our most popular programs during my time has involved the lease.
Yeah, that's excellent. Well, and you are going to give us details about what makes a good lease. But first things first, why is understanding a lease so very important?
There are many reasons for this, but one of the most obvious has to do with Missouri itself. As a very large agriculture state, Missouri has millions of acres dedicated to not only row crop, but also livestock farming, primarily in cattle. Both crop and livestock producers can use leases to further their businesses. Here in Missouri, we have the second largest number of farmers in the nation. Several of these are smaller businesses leasing land for a viable operation. And this is why land leases are so popular and so beneficial.
So then how are leases involved within agriculture, and why are they so prominent?
When we look at the sheer volume of acreage designated to agriculture versus the number of actual farmers, we note farming operations are becoming larger. From a business standpoint, and that is what farming actually is, leasing allows for farmers to grow without purchasing the asset of land. Leasing can help farmers grow their businesses and allow property owners to ease out of business, but it works best when certain items are included in the lease.
All right. Well, let's look at this first video we have for you this evening, detailing items in a lease.
A good lease transfers rights from property owner to tenant by answering the who, what, when, where, why, and how questions of the transfer. The who question identifies both property owners and tenants. Because they may be businesses, such as partnerships or corporations, it is important to use the proper business names on the lease. If other owners or tenants are affected by the lease, they also are acknowledged. Sometimes a single piece of property may be leased to different tenants for different activities at different times. For example, one tenant may have the right to plant and harvest row crops, while another tenant has the right to hunt on the same piece of property at a specified time. Each tenant needs to be aware of what rights they have to the property. Good leases clearly state what activities can be done with the property. A tenant granted the right to grow crops on the land may have some restrictions placed on that activity by the property owner. For example, the property owner may require the tenant to maintain conservation compliance. Other examples of what questions include: can the land be subleased? Can the cropping farmer charge hunters to use the land? Missouri law specifically denies the tenant the right to assign the lease interest without obtaining written consent from the landowner. Another important what question: what expenses is the property owner responsible for? This is particularly important to specify in share leases. But even cash leases may have the property owner providing some expenses, such as liming the soil. Several when questions are also important in a lease. Because a lease is a transfer of rights for a specific period of time, the beginning and ending dates of the lease need to be clear. Leases longer than 1 year may be desirable to both the tenant and property owner. When and if the lease will be renewed is important, because if the lease agreement does not give clear details, Many states define by law the lease renewal terms. Missouri law requires a 60-day notice prior to the lease anniversary date to terminate a verbal lease. Another when question revolves around when will the rental payments be made? Cash rent is often paid in full near the beginning of the year, but can be spread out in several payments. With share leases, the commodity is received at the end of production. The where question clearly identifies the property being leased. This is often done by providing the legal description of the property. Providing an aerial photo with property lines adds clarity. The why question may not be written into a lease, but understanding why each person is entering into a lease is important to maintaining satisfying long-term leases. The tenant wants to use the property for business and to make a profit. The property owner's reasons for a lease can range from wanting financial payment to maintaining improvements to building soil quality or helping young farmers get started in business. The how question clarifies uses that are allowed and disallowed. The property owner may specify that, along with the right to grow crops, the tenant has the responsibility to use specific production practices, such as no-till production, or avoid certain activities, such as removing water quality structures. Without a written lease, it may be difficult to remember the multiple answers to the who, what, when, where, why, and how questions that are all agreed upon in the lease negotiation process. Written leases also provide important information to property owners, tenants, and others about what was decided in case the tenant or property owner becomes unable to continue the lease. At the very minimum, there are 5 essential items in an operational lease. Who are the property owners and tenants? What property is being leased? What is the length of the lease? What is the rental rate? And lastly, there should be signatures on a written lease. Better leases discuss and record decisions to all the who, what, when, where, why, and how questions.
All right, good information there. Wanted to remind you guys there are no wrong questions or bad questions, so feel free to just drop those in the chat as we move along. Jason, let's talk about some of the things we saw in the video. What is the most important thing to have in a successful lease agreement?
I think that the single most important thing for both a landowner and tenant is to have a lease that is thought through and in writing. So I say it with a little tongue in cheek, but the most important thing on a lease is the signature. This allows both parties to know what to expect from each other. We are all forgetful at times, and having a signed lease agreement in writing allows both parties to reflect upon that agreement. There was a situation down in southeast Missouri where a farmer and a tenant had thought that they had agreed on who was going to be responsible for what when it came to fertilization and liming the ground. The tenant thought that the landowner was going to pay more towards the cost than what he thought what he was responsible for. So things became convoluted in that situation. And luckily for both, it did not go too far as legal issues. But if they would have had a signed lease and both of them had their signature and all the parties involved, then that situation would not have occurred.
Right. So why is it so important for an accurate description of the actual leased property be included in that lease?
We do not want to infringe on others' land rights. And if someone is not accustomed to the land being farmed, they may not know the exact boundaries. If the tenant is able to GPS the farm area, that is great. But if not, we recommend the tenant take time to attain the plat to the farmed land. It is easy to get a free photo now of land. You can get a free photo at agsite.missouri.edu. And in Canvas this week is a description on how to use this site. The landowner is wise to print one off and draw lines where the lease is valid. This clarifies to the tenant whether or not they have rights to other parts of the farm. It also makes available aerial photos, which makes it easier to communicate which portion of the farm is actually leased and which is not.
Yeah, that's excellent. And we do have that on your screen right now. So be sure to check out the Canvas site for that. Thank you for that, Jason. In the video, we do see that the length of the lease is important. Why is that?
Over 70% of the leases are renewed annually. Over 50% of land leases have had the same tenant for more than 6 years. Land leases tend to be long-term in practice, but renewed annually. A written lease specifies when the lease renews, so everyone is aware that an extension is necessary. The beginning and end of a verbal lease is often forgotten and becomes a point of contention. When one party wants to exit, the question of when the tenant can no longer enter the property a lot of times is uncertain on a verbal agreement. This is especially true of row crop farming, and if the tenant is desiring to double crop corn, soybeans, and then come back in with wheat. We want to be fair and equitable to all involved. Therefore, both parties need to sign the lease and be aware of end dates. This is the same for cattle production and potential hay crop.
So what are the benefits of leases that last more than 1 year?
Typically, longer lease land carries with it consistent revenue, regeneration for the land. The tenant benefits from knowing how long an investment in his farming will be used. He can more confidently invest in improvements such as soil fertility, liming, and fencing. There, up in Northeast Missouri, there was 2 situations where they do a lot of row crop farming and cattle farming. One of the situations occurred where land was being leased for cattle production. It was not stated in the lease who is actually responsible for the fences. And more specifically, a lot of times what we see in the leases, in the lease agreements, or rather what we don't see is who is responsible for labor and who is responsible for material. So there were situations where cattle got loose. Unfortunately, some vehicle accidents occurred because of that. And so it is important to have in there who is responsible for the upkeep of the fence and who is responsible for the materials and the other necessities for maintaining that fence structure.
Very good. Well, what's another important component that should always be in a lease?
In a couple of weeks, we're going to have a session just on hunting leases.
Right.
I feel that hunting leases have become more important over time and need to be a discussion point between landowners and tenants. A tenant may feel that hunting is automatically included in the lease, while the landowner may regard it as not. A lot of times the landowner want to retain that right. In absence in the lease as a retainment of hunting rights, there have actually been instances where hunting rights were subleased without the owner's knowledge and written permission. State law dictates that subleasing without permission, written permission of the landowner cannot be performed. Now, on March the 7th, we're going to have an entire program dedicated for hunting leases.
Did you have a hunting story that you were going to share with us?
Yes, years ago, before this became a pivotal point, there was a farmer in Northwest Missouri, and he was leasing out his farm. He was getting ready to retire, and he had children. And the tenant automatically assumed that since he was renting that ground for that 12-month period, now he did it correctly. He had a signed lease. As far as he knew, everything was there. But unfortunately, there was nothing mentioned. So the farmer's children decided they wanted to hunt deer for that hunting season. And when the tenant came in, he noticed that there was orange in trees and in deer stands. And so that created a problem. And that's where one of the things that we have for the law now, that's the story where that came from.
All right. Well, we are going to be talking about that in a couple of weeks, even more in depth. So thanks for bringing that up. We have been talking mostly about land leases, and the most common of which is a cash lease. Let's take a look at this second video for information or an introduction into land leases.
Over the last several decades, more and more land leases have moved from crop share agreements to cash leases. A fixed cash lease is one where the tenant pays the property owner a fixed amount of money to use an asset for a specified time period. The property owner contributes only the asset being leased. Property owners like cash leases because they provide a certain level of income without requiring a lot of involvement in the farming activities. A cash lease is considered low risk to the property owner because it provides a specific level of income. But, usually, reward increases with risk assumed. A cash lease might provide lower income over time than a crop share lease. A cash lease has tax implications for the property owner. A cash rental payment, less taxes, interest paid, insurance, and a few limited qualified deductions, will be considered investment income. Fixed cash rental payments are not subject to self-employment taxes. If a property owner is retired, cash rental income does not count against Social Security income limitations. The cash lease also affects the property owner's involvement in USDA programs. With a fixed cash rental agreement, the tenant is assigned 100% of USDA program benefits, such as disaster payments. Tenants like the simplicity of fixed cash rental agreements. Cash rents make it easier for a tenant to lease from multiple property owners. The tenant receives all profit from higher production and is free to make production decisions with less oversight from the property owners. The tenant is on the opposite side of the risk-return principle than the property owner. The tenant takes on more risk by having definite cash expenses associated with production, but not having guaranteed income from those expenses. A cash lease is expected to provide more income to a tenant over time, but there may be bad years in which the tenant loses money. A fixed cash lease requires negotiation between the property owner and tenant. The lease is not complete until each person understands what each is offering and what each has responsibility for. The big question when finalizing a fixed cash lease is determining the fixed cash payment terms. Cash payment can be a single payment at the beginning of the production cycle, say March 1st. Or several cash payments can be made throughout the production cycle, say March 1st and November 1st. Many property owners prefer rent up front because that assures they get the rental payment. They may be willing to take a lower total payment, knowing they receive the entire rental payment up front. The tenant would benefit from payments made throughout the year at times when he has more cash on hand from selling last year's crops. If the entire rent is due at the beginning, the tenant may have to rely more on borrowed money to make the payment, resulting in more interest expenses. Several methods exist for establishing a cash rental amount. 3 common methods are using published cash rental rates, soliciting bids, and calculating the contribution of each party. Published rental rates should be used cautiously. They report the average rent paid for property over a broad geographic area and do not reflect all the qualities of the specific land being leased. They provide insight into trends, but not specific rental values. Receiving bids for rental property is likely to result in the highest rental payment. But rental payment is not the only important factor in a rental agreement. A property owner should follow up the bidding process with interviews of the possible tenants to see which are most likely to meet her objectives. Calculating the relative contribution of both property owner and tenant provides the most information for coming to a satisfactory lease agreement. The calculation method will be covered in another presentation. Your regional extension specialist can provide more information on cash leases. aglease101.org provides an educational guide and sample lease form for cash rental agreements.
All right, great information yet again. And we already have some questions in our chat box, so keep them coming. Thank you for doing that. And wanted to ask you, Jason, do you prefer or do you recommend cash rent on farm leases versus share leases?
The amount guaranteed to the landowner, regardless of the crop or livestock prices or yields, is probably the chief benefit for the landowners. Also, it allows the tenant to know the exact amount due up front and certainty of income for the landowner, and expense for the tenant is the chief benefit. So we're looking at more toward a cash.
Okay. Well, the video mentioned the risk reward trade-off. What exactly is that? And how does it affect the benefit of that certainty that you mentioned?
This can be quite technical. The risk reward principle in economics states that the greater the risk should be taken in business only if the expectation of greater rewards. Certainty of income for the landowner means minimum risk. The landowner could be missing out on revenue if crop or livestock prices trend higher. But with a cash rent, the tenant takes the risk of low yields and commodity prices. As an example, if I purchase a certificate of deposit known as a CD at the bank, I expect a 2 to 3% return.
Mhm.
However, there is much more risk with the stock market if I put the same money into stocks.
Well, in addition to that guaranteed revenue for the landowner, how else is cash rent beneficial?
Cash leases are simple. The tenant doesn't have to show records to the landowner. If the tenant has multiple leases, then he or she can use the same resources on different pieces of land without having to worry about what the land received as far as what seed, fertilizer, lime, or other agriculture farming inputs.
Okay. Well, we're going to start with our question and answers, and let's start with this one. What is your recommendation, Jason, or your thoughts of notarizing written leases?
I would highly recommend it. It just adds more solidity to a lease agreement. When you sign it, and if the tenant signs it and the landowner signs it and all the parties involved sign it, then that's pretty much solid. But when it's notarized, it's locked in and it's rock solid.
Okay.
Yes, ma'am.
Whose responsibility is it to maintain fencing in cattle operations?
Typically, it's up to the tenant to maintain fences. But this is why it is so important to have an agreement in writing. We have to look at it rationally. The cattle producer does not want cattle running loose, so the operator typically maintains good fences. Now, to alleviate cost, the lease may have a written understanding to who pays for what in material and labor for maintenance and upkeep.
Let's take another one from the chat box. Can you discuss how to renegotiate a hybrid lease?
We're going to follow up with that one, and we will have that in Canvas.
Okay, very good. How does a landowner find the going rate for cash rent in the area?
In Missouri, here in Missouri Extension, we have some publications, and from time to time we go out and we survey. We survey a lot with the cost of land, what the going rate is in the different areas. However, some areas are different. Land values are different in those areas. So it can vary depending on what part of the state that the tenants and the producers are in. We utilize the USDA, and they offer good resources.
Very good. All right, here's another question. Who should purchase insurance in a lease agreement?
Both landowners and tenants should have insurance. If they don't, especially when it comes to the cattle operations, then the landowner needs to certify with the insurance company that the tenant has that they actually do have insurance. In a typical lease covering cattle, land utilized is covered by both parties. This is something that I always stress, because even with the best offenses, random acts of nature occur, and just one cow on a highway can create major damage.
You mentioned earlier on the lease length. What are the typical dates for that?
Anything in writing takes precedence and supersedes over any verbal agreement. There is a state law regarding terminating a written lease, but we all know that farming is seasonal and the seasons of farming fluctuate. An example is double cropping, overwintering with wheat that the farmer is actually going to harvest. And if, say, a cattle producer, if they are going to harvest hay for the next year, they may add inputs to the farm.
Okay. We have another question from the chat box right at the beginning that I overlooked. What restrictions have you seen imposed on tenants by the landowner in a lease, and are restrictions common?
Restrictions are common, and as society changes, as agriculture practices evolve, they are becoming more and more mainstay. There can be restrictions on how close to fence rows, restrictions on how close to waterways, ponds, things like that. Also buildings, barns, other utilities. So yes, restrictions are becoming more and more commonplace in leases. And it doesn't mean that restrictions are negative. It doesn't mean that they're a boon, but yes, they are becoming more commonplace.
Okay, we have a couple more questions. Is there a special type of insurance for cattle operations or row cropping?
They do, but we would advise the participants this evening to contact their local insurance agencies and see what they have to offer.
Okay,
But
great.
they do offer specialty coverage. Yes, ma'am.
Very good. How are leases affected by government programs?
That is another good question that we are going to have in Canvas so that all of our participants will be able to get a better, more clear understanding.
Great. On a crop lease, who is responsible, landowner or tenant, for the maintenance of the liming? As a follow-up, how does the landowner ensure lime levels are kept up?
That would be another thing that is put in with the leases. It can be placed in the lease. A lot of times what tends to happen is the fertilizer and liming is sort of crop shared on its own. It improves the value of the land. And so sometimes the tenant and the landowner get together and they determine the feasible amount for each if they both decide that they want to put it in the farming operation in the dirt. I think one of the ways that the levels are kept up is soil samples, and through the University of Missouri Extension, we offer help in that category. So we can do that for you, and the results of those soil samples. That's how you will know if it's being kept.
Very good. Okay, one last question. When do you suggest that a tenant or lease begin? When do you suggest that a tenant or landowner begin renegotiating a lease?
I would say definitely over a month before the termination date. I want to say about 3 months would be my recommendation. It gives each party time to figure out constraints and what they want to do moving forward. So that alleviates a lot of pressure. If you start within 3 months before the end of termination, I think that's a good date.
So a lot of this information touched on some legal, some taxation issues. We always want to have you specialists talk about, your role in all of this and that how you are not offering that advice,
Yes,
rather education.
Yes, ma'am. We're for University of Missouri, and we're just here to educate. That's our job. That's what we do. We all like doing what we do, but there are other entities out there that do offer legal and taxation advice, and so we leave that up to them.
Okay, very
Yes,
good.
ma'am.
Well, if folks have any more questions for you, Jason, and we're going to have your information in the chat, but what is your email address and any other phone number information you might have?
Jason Morris, it's JCMORRIS at Missouri.edu.
All right. And a reminder, our series is going to go more in depth on livestock leases and hunting leases. Jason touched on some of that today. Thank you for being here.
Yes, ma'am. Thank you.
Yes, and thank you for all of you for joining us yet again. We will be back in a week with Rachel Hopkins, and she will talk about the landlord and tenant perspectives specifically. Until then, we'll see you next week.